Well, good morning. It's my pleasure to talk about crop enterprise budgeting for benchmarking profitability, as Jamie mentioned. And so to start off here, enterprise budgeting is a method for calculating, estimating, or projecting the profit associated with an enterprise by determining and accounting for costs and revenues. And of course, agricultural enterprise would be a distinct component of the farm business, such as the corn production enterprise, the alfalfa production enterprise, or the dairy production enterprise. And this morning, we're mainly concerned with crop production. So we're talking about crop enterprise budgeting and what are the objectives. We want to do use them for some analysis and planning. Maybe we can identify some high cost areas to help improve our efficiency. We can compare costs and returns under alternative scenarios. For example, how does corn following soybeans look compared to corn after corn? Or maybe adding some inputs like a fungicide or different rates of nitrogen and making an assumption about how yield would be affected according to that and see what the return is there. A big one is to determine our break-even cost of production. What's our cost per bushel? So we can kind of compare that to the market price that we need to get to have profitability. And then maybe we can do some risk and sensitivity analysis. So, what kind of a yield goal do we need? If we can boost our yield or get a higher price, how is that going to affect our profitability? So the crop enterprise budget, what are the main components? There are three main components, those being income, costs, and revenues. Income would be yield times market price, and then, or if we can place a value on the feed that's produced. If there are any byproduct sales like straw or sweet corn silage or something like that, would be part of our income. And then any farm program payments specific to the crop. We may or may not want to look at those, but certainly that's part of the income equation for the crop. And our costs can be split out into operating or variable costs, which are the sometimes referred to as direct costs. Those are the annual costs incurred specific to this year's crop. And then we have capital or fixed costs, which are the ownership costs associated with the fixed assets. And we want to annualize those for our crop budget. And then we have returns or some measure of profit. We might look at just our return to fixed costs, which are, the income over the operating costs. We can look at return to management, which would be income over fixed and variable costs, excluding whatever we need to however we want to value the owner's management and probably some of the labor. And then if we can do that and subtract those costs out as well, we can have a estimate of net return, which is income minus total costs. This is a list of the primary operating or variable costs that we would be considering. So fertilizer and lime, if we have a consulting fee that we pay, seed, pesticides, any custom work hired for that year, land rent if we're renting land, crop insurance, and operating interest on the money that we're borrowing to put the crop in, or maybe the opportunity cost of capital. We're purchasing some inputs in December or April. We have to account for the cost of the money that we have borrowed or tied up in those inputs between the time that we purchase them and the time that we sell the crop. And so often those are treated as kind of a pre-harvest cost, because once the crop is harvested, we can pay those costs off. Also, fertilizer and lime and maybe soil testing, maybe we're not buying those every year, but when we do, we probably want to allocate those, divide them up and allocate them across across the crop production years to which they apply, just to kind of treat those fairly. I mentioned fuel and repairs and labor. Those are our main costs associated with field operations. So tillage, planting, harvesting. Those are going to be the direct costs associated with those, other than custom work, are the fuel and repairs specific to the year, and hired labor. Those, most of these things are going to be pretty apparent how much we're paying for those, or we can come up with costs based on the prices that we pay for them. Field operations in an enterprise budget gets to be a little bit more complicated, because we have to figure out what our, how much fuel and repair and labor we have for those on a per acre, per crop basis. There's different ways of doing that. We can maybe use our whole farm accounts, where we look at the total expenses for those items in a given year, and then make some assumptions about how to allocate them across each crop, divide by acres, and get the cost per acre that way. Not always easy. Some of the fuel we are going to use for mowing the lawn, plowing snow, mowing ditches, that type of thing. So might be a little bit of work involved, depending upon what our farm accounting, record keeping, and financial analysis tools and procedures that we have. We might want to then just go to some web-based tools or published values for field operation costs. For example, Iowa State University has a Ag Decision Maker webpage, as well as University of Minnesota Extension. They have resources where you can use some tools to determine field operation costs based on the size of the tractor, the combine, and the equipment that it's pulling. Or Minnesota offers a field machinery cost estimates guide, where they have published values based on kind of a ag engineering approach that estimates fuel cost and repairs, and even some of the fixed costs associated with depreciation and interest and housing associated with those field operations. You can refer to those lists. Or we can use custom rates from published custom rate guides, such as the one in Wisconsin. Iowa State has another good one. Those states do surveys of custom operators throughout the state to ask what their rates are for any number of field operations. Those are, probably some numbers that get us in the ballpark. It's not always clear, how those custom operators are determining their costs, or the extent to which they really get into some of the ownership costs and things like that. So each of these methods has kind of advantages and limitations, but they're all options. This is a list of the fixed costs that we need to consider. So we own equipment. That equipment probably has some depreciation, some interest if we're borrowing money, or again, the opportunity cost of capital that we have tied up in owning that equipment. We're probably insuring it. Buildings, we're going to have insurance. Property taxes, repairs and maintenance. Land, if we own it, maybe some interest and property taxes. Insurance, this would not be crop insurance, but more our business insurance, liability insurance, and again, the management costs. All of these things have costs that we really need to account for somehow or another in our crop enterprise budget. A popular convention to use to place a value on some of these fixed costs would be the capital recovery charge, basically an estimate of annual depreciation, considering acquisition cost, useful life, salvage value, current market value, and the effective interest rate over the time that we own that, plus yes, interest on that investment. Without getting too far into the way that's calculated, I'll just say that it tends to be about 10% of the current value of machinery and equipment, or about 5% on buildings that we can use to estimate the fixed costs associated with those things. Insurance, we're going to have to, pay that each year. We probably know our costs on that, or we could estimate them at about 0.5 to 1% of the asset values. Land, again, we probably know our mortgage interest plus the property taxes, or we might just want to use a market rental rate as an opportunity cost, because if we're not farming our land, we could rent it out, and so that represents a cost as well. So how are we going to pull these numbers together to build a budget? In addition to the field operation costs, we can use our whole farm accounts. We probably need to use our balance sheet to come up with the asset values. Or again, we can go to one of these web-based budgeting tools. Iowa State, University of Minnesota, and the Illinois Farm Doc program all have a lot of good tools on their websites, both not only to estimate or calculate costs of field operations, but also to build budgets or to look at published budgets that they have. In the case of Illinois and Minnesota, they use databases that several thousand farmers in each of those states participate in a farm management program and enter a lot of their financial data into these databases, and that is pulled from there by these states' programs to develop some example crop enterprise budgets based on those real numbers. They are averages, and so won't be specific to your situation, and they are from other states, but they are things that we can reference. I think particularly the Northern Illinois one from the Farm Doc, and currently they are the only ones that have updated 2022 crop budgets. I'm told that Iowa State will have theirs relatively soon. Also, University of Wisconsin Extension. If you Google UW Extension crop budgets, that will take you to the University of Wisconsin-Madison Division of Extension Farm Management webpage, and there you will find a crop budget analyzer. For example, if you pick field crops, it will take you to a spreadsheet calculator, and you can select corn, soybeans, small grains, seeding year, or established hay. I will say that this one, it hasn't been up. There are some default values in here. They haven't been updated since 2020, but a lot of people do like this one because it is a little simpler than the ones from some of those other states. And when it is updated, we'll have information more specific to our state. But I took a stab at doing a budget for corn, following corn. And what you can do is you can go into these fertilizer sections here and enter the price for fertilizer that you're going to pay or that you're expecting to pay. And so, for example, and some of these default values I didn't change, but the ones I updated were, I'm using 1034.0, about 19 gallons per acre. And I entered $809 a ton for that. I entered $7.99 per ton for diammonium phosphate, also $7.79 per ton for potash. I put in $8.79 per ton for urea, $5.48 for 28%, and $5.49 per ton for ammonium sulfate. And then, so I went in here and said 19 gallons per acre for 1034.0 as starter. They want to know the actual pounds of nutrient that you're going to apply. So about 100 pounds of potash for 60 pounds of K2O. I'm applying Also, 60 pounds of N as urea and 11 pounds of N as ammonium sulfate in that bulk spread blend with the potash. Then I'm going back and side dressing 60 units of 28 of nitrogen is 28%. That's going to give me about $260 per acre in fertilizer cost. Then down here it asks, and it doesn't total that. I kind of wish it did, but just totaling it up on my own, that's what I came up with. And also a little bit of lime, kind of an annual cost of lime that I'm assuming there from an application to cover a few years there. Seed, about 34,000 seeds per acre, $285 per bag, gives me $120 on seed. Here I've included some miscellaneous costs for soil testing, again, annual costs, custom fertilizer spreading, crop consulting. I've got 2 applications of herbicide, each averaging $22 for $44 on my herbicide costs. I've got a couple of application costs there. And I don't have anything here. I haven't entered any amounts for fungicides or insecticides, irrigation. I came down here. I do have 2 passes of tillage, a chisel plow and a field cultivator. And then it asks me for no-till plant or a planting operation here, which I valued at $22 per acre. And I am using custom rates from the Wisconsin custom rate guide from the most recent one was 2020. So the 2022 one rates might be a little higher here considering fuel and repairs, but this is what I'm using for this budget at this point. Other expenses, some things for combining, crop insurance. I'm figuring a price, a corn grain price of $5 at harvest. So I'm assuming no storage, but I do have some drying costs in there. I do have a land cost in here, and what I'm doing is using an average cost. I have a scenario where I figured I own about half of the land, so I've got some mortgage interest and some property taxes of about $50 per acre, and then I'm renting some land at $225. That would give me an average cost of $140. So I'm assuming, so with all that, my operating costs are about $814 per acre. I'm assuming a gross return of 925 based on 185 bushel yield at a $5 harvest price. So I have a net return of $110 per acre. And this crop budget analyzer will also give you a little chart here that is a price and yield sensitivity analysis. And so you can kind of look at, you know, what the outcome would be if you had a little higher yield or a little higher or lower price as well. I'm just comparing this with, so I did the same kind of exercise for soybeans and winter wheat. And so on my cost per acre, as I said, corn was $814, soybeans, I came up with $523, winter wheat at $505. These are all my costs per bushel. So, you know, I was planning on a $5 harvest price for corn. So, you know, we're approaching that. $9 on soybeans. I was figuring about $12 per bushel for when I looked at my return to management here. So you can actually see I'm coming up with a little bit better return to management. So this is all of my custom rates, I'm assuming, include ownership costs for equipment and probably some ownership costs you know, for fixed assets like buildings, but maybe not all, and probably not owners, management, or labor. But a little better return for soybeans and under my assumptions. And then about 574 on wheat. I used a price of $6 to come up with my return to management. And there it depends on only a $23 per acre return to management from just the grain at a yield level of 88 bushels per acre. I was a little surprised at that with a $6 wheat price. But when you add in the straw, my assumptions there actually make the wheat look the best of the three. And it was kind of interesting when I compared my costs per acre to the cost per acre that the Illinois Farm Doc program was coming up with for the Northern Illinois region. They were very close, 814 versus 807 per acre on corn, 523 versus 518 per acre on soybeans, and 505 versus 509 on winter wheat. They, interestingly, too, have a little bit better return on soybeans. They use the same market prices that I did for corn and soybeans of $6 on corn. I'm sorry, $5 on corn. I should have had that in this table. $5 on corn and $12 on soybeans. I had $6 on wheat. They had $7.15. So their wheat yield is a little less than mine, but a little bit greater return. And they only considered grain. They did not consider any straw.